October 26, 2022. Remember that date. That was the day a tech giant bled out on the floor of the stock market. That was the day Microsoft didn't just have a bad quarter, it performed a historic act of financial self-destruction. In just 24 hours, shareholders watched as over $200 billion vanished. Poof, gone. An amount of money larger than the entire economy of Greece or Portugal evaporated before the closing bell. This wasn't a correction, this was a full-blown panic. And it was all triggered by a single earnings call after the close on October 25th, a call that exposed a fatal crack in Microsoft's armor. But the real, lasting shockwave from that day is this. It revealed a brutal, new, profit-at-all-costs Microsoft. And in that ruthless corporate reality, nothing is sacred. Not even the future of Xbox. To grasp the sheer terror of October 26th, you have to understand the Microsoft of the decade before. Under Satya Nadella, Microsoft became the cool, unstoppable king of the cloud. Its stock was a perpetual motion machine. Why? One word. Azure. The cloud computing division was the undisputed growth engine. The golden goose promising endless profits and making Microsoft Wall Street's favorite son. And in the background, Xbox, a beloved, if sometimes quirky, pillar of gaming culture. Microsoft seemed untouchable. Until the afternoon of October 25th, the company released its Q1 2023 earnings. And within hours, the golden goose was on life support. The headline numbers for the past quarter? Manageable. But the details and, more importantly, the future that Microsoft outlined sent a shockwave through the market. 3 facts from that call shattered a trillion-dollar company's invincibility. The past was fine. The future was a nightmare. Microsoft's guidance for the coming quarter wasn't just soft, it was a siren blaring that the good times were over. For a growth stock, slowing growth isn't a problem, it's an existential crisis. A 5-point deceleration. Say that out loud. For a segment carrying the entire company's growth hopes, that's not a slowdown, it's a cliff. This was the lit fuse. It wasn't just one problem. It was a perfect storm. While Azure was slowing, the PC market, Microsoft's other historic cash engine, was falling off a building. A decline in the mid 30%. That's catastrophic. So, in one breath, the market hears. Our growth engine is sputtering, and our legacy cash cow is critically ill. Panic is the only rational response. Now here's where you read the room. The entire Q&A on that call was a masterclass in avoiding the C word, consumer. It was all about enterprise software, cloud contracts, and business margins. Surface hardware? A passing mention. And Xbox? Swallowed by the void. When a company loses $200 billion in a day, it enters survival mode. It triages. It asks one question of every division. Are you a definitive, massive profit center right now? If the answer is fuzzy, you become a cost to be managed. And that brings us to the billion-dollar question for every gamer. Let's be brutally honest with the new math of Microsoft. The Xbox hardware division is not the profit leader. It's a competitive, low-margin business. Its value has been in the long game. Ecosystem, Game Pass subscribers, and future content. But listen to the language that now defines Microsoft post-October 26th. It's the language of a financial fortress under siege. Disciplined cost management, aligning our cost structure, prioritizing strategic growth areas. In this new, hardened reality, Xbox isn't competing with PlayStation anymore. It's competing with Azure for internal resources and executive mindshare. When your stock is your gospel, beloved projects that don't print money become expendable. The fear isn't a sudden shutdown. The fear is a strategic suffocation. Fewer big-budget exclusives as bets are hedged, more games going multi-platform to chase immediate revenue, a scaled-back vision for Game Pass, and hardware becoming a secondary thought. The player-first Xbox spirit is on a collision course with a shareholder-first Microsoft that just got the scare of its life. So, the legacy of October 26, 2022 isn't just a chart spike, it's a permanent corporate personality shift. It was the day Microsoft learned it was not immune to the market's violent wrath. The result is a leaner, more paranoid, and financially ruthless company. It will pour fuel on its undeniable cash fires, Azure, Office, and now, everything else. Every consumer-facing passion project will live under one relentless question. Prove your worth or become a cost-saving line item. The era of the cuddly, gaming enthusiast Microsoft is over. The era of the financial machine is here. What's your take? Is Xbox living on borrowed time in this new Microsoft, or is it safer than we think? The debate starts in the comments. I'm reading everyone. If this deep dive into the raw power of a single bad day shocked you, smash that like button. It tells YouTube this story matters. Subscribe and hit the bell, because next we re-breaking down how this exact same corporate panic is dictating the insane AI arms race right now. Thanks for watching. From Solid Base Tech News, goodbye and see you in the next one.